Good evening and welcome to Cooperative Vermont. I'm Matt Cropp.
And I'm Eric Davis.
And we're coming to you live this Sunday, August 25th, 2013, from VCAM Studios in Burlington, Vermont. And this evening we have no guests in the studio, but we'll be touching on a pretty pertinent campaign and that's been really heating up in the past few days, the Don't Tax My Credit Union campaign. So if you're on Twitter, you've been seeing, and you are co-op nerds like us, you've been seeing the DontTaxMyCU hashtag flying about, and the American Bankers Association started getting in on the game with "It's time to pay."
Right.
So, and they've the respective Twitter accounts of these two organizations have gotten into some heated exchanges.
Yeah, and this is only the latest chapter of a long history, which we'll touch on during that segment.
Right. Yeah. It's quite the story, and this is just one piece of a very big picture. But first, the news.
Exciting. It seems like often in the co-op news, we've been sharing news of new credit union branches opening up and serving areas that they didn't serve before. So that's really exciting. And VSCCU recently opened a branch in St. Johnsbury. So that's great for the community there. Yeah,
each one of these little towns that either didn't have a credit union before is now kind of being brought into cooperative finance. And yeah, I think it's slightly more than 50% of Vermonters are members of credit unions.
Mm-hmm.
So
yeah, that's right.
This is kind of the continued march of cooperative finance towards hopefully an eventual domination of the financial services sector. But other sectors are also expanding. Obviously, much smaller, but still very visible is the food co-op sector.
Yeah.
So you've seen some more movement. The Granite City Grocery Project is continuing to collect equity now, so they're in that stage of the project. The MoCo, the Morrisville Co-op Project, has done some pretty public outreach. They got T-shirts printed up.
They're nice T-shirts too.
Mm-hmm. Yeah. I kind of want one. And they've done some outreach at community events around Morrisville, with the hope that they seem to be kind of like the next furthest along after the Granite City Grocery Project in terms of like where they're on path.
Right.
And then also word has come out that an activist who we both met a while back, Tyler Westbrook, has expressed interest and has started organizing in the town of Bristol around the idea of creating a co-op there.
Interesting. I didn't know Tyler was involved. Mm-hmm. That's great.
Yeah. So we had a long conversation, and I sort of forwarded some resources along, like Food Co-op Initiative and stuff. So he started having conversations in the community out there. So if there's anyone out there watching who knows anyone in Bristol who'd be interested in getting involved, they've created a Facebook page, which I think would be the easiest way to sort of get connected. But obviously in the very early kind of conversation stage of the process. But that could be really cool to sort of, again, continuing to deepen the food co-op network into a lot of the smaller towns in Vermont.
It's really interesting to see the different stages that these co-ops are in too. With Granite City Grocery really focusing on getting a place, and Morrisville focusing on outreach at this point, and have to have another food co-op sort of trying to find its identity. That's really exciting to have that diversity.
Mm-hmm. And it's definitely like we've been following Granite City Grocery since the start of this show, and it can be a long process. Mm-hmm. You've got to build community consensus, bring all these different people into the picture. But if it's successful, you've got this strong base on which to build.
Yeah.
So it's cool to see that stuff. Sort of the food co-op economy continuing to expand alongside their credit union brethren.
Absolutely.
And then another piece of kind of interesting news. Last summer was the first year that CoCycle happened, which was a group of sort of students who rode their bicycles across the country, visiting co-ops all along the way as a way of both learning about the cooperative movement, but also sort of spreading awareness of the cooperative movement. And that was pretty successful. So they did a second one this year, starting on the West Coast and then heading east, and they just arrived in their 12th and final state of Massachusetts. And so just south of the border, I believe it was in Greenfield, the Valley Alliance of Cooperatives put on a big sort of welcome party and tour of cooperatives down there that And so it's really, really neat to see that this this national project that's been bringing a lot of attention is our neck of the woods, even if they didn't quite make it to Vermont.
Right. Yeah, and that was sort of framed as Co-Cycle arrives in the valley of the co-ops. And it's interesting to see the diversity of that cooperative economy there. And it's something that's really exciting, love to see happening everywhere, rather than sectors, cooperating amongst themselves, finding their identity as cooperative institutions and in the community.
Yeah, and I mean that region, the region we're talking about is sort of the Connecticut River Valley in southern Vermont and western Mass, really. Has quite a density of co-ops and some institutions that other areas, geographic areas, really don't have, that have been really sort of inspiring a lot of activity. Some of the center of gravity of the neighboring Food Co-ops Association, they've got a number of members down there. And there's the Valley Alliance of Worker Co-ops, which actually has inspired a group of worker co-ops in the Burlington area to organize as well. And I've been privy to some conversations that have been happening about them kind of trying to create a network up here. And it's unclear quite yet, at least as far as I know, if it's going to try to directly associate with the Valley Alliance of Worker Co-ops and become like the North section, or perhaps even become its own parallel but similar organization, sort of centered around the Champlain Valley. But it sounds like there's been some really good conversations happening around that. In the next few months, we'll see the official launch of that sort of organization. And
you have credit unions involved down there as well. The UMass credit union. What's that?
I think it's like
five
UMass 5 colleges.
Right. So it really across sectors.
Yeah, and so hopefully Vermont is a piece of that, and hopefully other parts of Vermont in which things aren't quite as integrated and there isn't quite as much collaboration or cooperation, I suppose. We'll be seeing more of that happening in the coming year. And to build us towards that, we've got there's a few upcoming events that folks out there, if you're interested in the cooperative movement and want to get more involved, to be aware of. The first is for the Keep BT Local campaign to turn Burlington Telecom into a consumer cooperative. There's been some outreach activity to recruit new members. The farmers market has been one place where the co-op has been able to get a table, and there was some tabling that happened a few weeks ago. And so the next tabling opportunity is going to be on, I believe, August 31st, this coming Saturday. And folks are looking for, the group is looking for people to help staff the table, answer people's questions, help set up, break down, that sort of thing. So if you go on the Facebook page, you'll be able to find the information about how to sign up there for a shift.
Cool. And Cooperative Vermont is hosting our third happy hour in September. September 10th at the Hackerspace in Burlington, Laboratory B. Those folks joined us on our last show. Looking forward to joining them at their space.
Yeah, it should be a good event. It's we'll have some pizza, bring probably some cold beverages for people to sip on, and it's going to be an extra special event. Some folks from the Hackerspace are going to give a brief presentation, kind of on the history of the Hackerspace model. And if you want to see the conversation we had, you can go to our YouTube channel and find a previous episode. Just type in Co-op Vermont, you'll find our channel with all the archived episodes. But in addition to that, there will be a group of students from Japan who are going to be in town visiting for a few days, specifically to look at kind of cooperatives and what is referred to as like the solidarity economy. So they're going to be going to a number of different places, checking out the Champlain Housing Trust and their housing co-op program, I think City Market, the Inner Vale, going to be hitting a bunch of different spots. And so there's 4 students and a professor who's kind of going on this trip with them. I think they're the college students, and so this will be a really interesting chance to have a conversation with them about, what's the cooperative movement like in Japan? What are similarities and differences, and what can we learn from each other? So if you're interested in co-ops, there's an event on our Facebook page, or if you go to laboratoryb.org, which is the name of the hackerspace where we're going to be having it this time, there's a little link to a map of how to find the space. And it's a little bit difficult to find once you get there, but I think we'll put up some signs with arrows and things, so that will hopefully make it easier.
Yeah.
And then finally, there's been continued planning. Cooperative Vermont was involved in the Vermont sort of owning the new economy summit back in the end of April. And there's continued energy around this new economy idea. And so in October, there's going to be a new economy week with a number of events that are planned with different groups organizing things. So there's having already done some stuff around the new economy, and there's a lot of co-ops that have a big place in that. We've been talking about wanting to put on a co-op event, and it seems to be coming together now. So at the last meeting, it looks like there's going to be a few different things happening, but the general details of the event, we don't know the exact location, but it'll be probably at one of the elementary schools in Burlington, in the cafeteria. But there will be sort of brief discussion about the cooperative movement in Vermont, followed by an announcement or presentation by this group that's going to be forming this worker co-op alliance. And then the meat of the event is going to be there's a delegation from the FAT, which is kind of a labor organization in Mexico that has a large co-op sector. And so they're going to be coming up and giving a talk, both talking about their organization and the cooperative movement in Mexico, some of them through interpreters, but also this addressing the question of how does cooperative democracy work or not work in cooperatives in Mexico, and trying to sort of foster a conversation about cooperative democracy in particular at the event, and then potentially having our co-op happy hour following the event, so there'll be kind of some time for networking and more informal conversations after the speakers.
Cooperative Vermont goes international.
Exactly.
Yeah,
I think
nice.
the title's still being batted around, but I think we've settled on something around the idea of co-ops democratizing the economy, perspectives from Mexico and Vermont.
Cool.
So yeah, it should be a really interesting thing. So again, if you want to keep abreast on these issues, the best place to check out is our Facebook page, which we'll create events and post kind of updates as we go. So just go on and check out Cooperative Vermont on Facebook, or you can. I think we're going to try to update the website and the calendar, so throw these up on. We've got a Google Calendar as well.
We also got a custom Facebook tag, so it's facebook.com/coopvt.
Ooh,
yeah.
All right, that's exciting. So yeah, but if there's any other events that come up in between shows, we do shows every 2 weeks. Those will be the spots to find them. Mm-hmm. So hopefully we'll see some of you there. But in the meantime, it's time to, I think, hit on this pretty intense mobilization that's going on with the credit union movement right now.
Right, and this is, I guess, the latest chapter in what's been a long history of sort of for-profit finance, trying to hold down the not-for-profit sector, with continually calling for restrictive regulations and often questioning the tax exemption that credit unions enjoy as not-for-profit cooperatives.
Mm-hmm. And I mean, this conflict has very deep roots.
Mm-hmm.
When credit unions were first getting underway in the early part of the 20th century in the United States, they weren't really in direct competition with commercial banks, because commercial banks considered really poor people to be just kind of not even worth dealing with. But some of those banks did have interest in what we would call now like payday money lenders or check cashing services, mm-hmm. functionally loan sharks that charge enormous amounts of interest to people with low incomes and for a payday loan or something like that.
Right.
So when credit unions were being founded, one of the biggest blocks of resistance to credit union enabling legislation, which allowed for them to be legally incorporated in the state, were the kind of the loan shark lobby and the small loans business, because it clearly cut into their profits, because instead of having to take out a loan at interest rates that would often go into the thousands of percent from these for-profit predatory lenders, you could instead go to your community and say, okay, well, if I've, can I get a loan, or your savings in turn would be used on a not-for-profit basis to meet the credit needs of other members of your community.
Right. communities pooling capital, essentially.
So for the first few decades, really the big conflicts on the legislative field was these payday lenders not wanting competition. And this is a dynamic that's continuing down to the present, has continued through the decades down to the present day and the current situation in which banks are actively trying to lobby Congress to get a tax put on credit unions. But really the banks and credit unions started to come into direct competition after World War II, when the kind of level of demand for consumer goods meant that, combined with the development of credit, of more quantitative credit ratings and credit scores, allowed banks to better manage risk and then move into lower income customers in a profitable way. And so suddenly, on the one hand, the banks were kind of moving into credit unions' traditional territory, and on the other hand, credit unions, as there's deregulation, started being able to make larger loans, like car loans or even mortgages. So the two institutions over the decades have become closer and closer into conflict. And there were other sort of mutual, not-for-profit models of finance that were also in play, and several of these have been very much the target of the banking sector as it's tried to sort of maintain its model of for-profit banking as the dominant or virtual monopoly model in our banking system. And probably one of the greatest examples of this is mutual savings banks. Mutual savings banks also operate, like credit unions, operate on a not-for-profit basis towards their members, and as a result, their behavior would be similar in terms of taking lower risks, behaving more responsibly, et cetera. But in the 1950s, their tax exemption for being a not-for-profit organization was removed, and around that time as well, the deposit insurance funds of the mutual savings banks and the commercial banks were merged into one. And as mutual savings banks were safer and more risk averse, what that functionally did was it meant that all the risk was pooled together, and the for-profit banks could take greater risks without paying higher premiums for it, which was one of the driving factors in the gradual reduction of the percentage of assets held by mutual savings banks, because unlike a for-profit bank, mutual savings bank can't raise capital by issuing shares. It has to, essentially its capital is the deposits of the members,
So that's similar to a credit union.
Yes, and so there are still some mutual savings banks around, mostly in New England, but they have basically, once the banks got the upper hand legislatively, it's been kind of a death by 1,000 cuts for that sector, and now there's just sort of like, in terms of their impact on the economy, a very minimal factor compared to, and the really last major holdout of cooperative finance is the credit union movement.
It's interesting, the subsidy you mentioned with the share insurance funds being pooled. It strikes me.
For them as, I guess, deposit insurance. But
right.
So, yeah,
we have a similar thing happening today for the mega banks with like the too big to fail subsidy, where banks get to such a point where essentially they're assured that they won't go under.
Yeah, and that's a really interesting dynamic where, and I think this is another one of those things where the cooperative model really throws the banking sector for a loop, because if you're considered to be too big to fail, you receive a subsidy that works as follows. Any large institution that has more money to deposit than the $250,000 that the FDIC insures is willing to accept a lower rate of interest on its deposit. Like if it's putting $1 million in the bank, say, like it's a university or a church or whatever institution has a pile of money it needs to deposit somewhere. So what it does is it says, okay, well, a too big to fail bank bears an implicit guarantee from the Federal Reserve that if it gets into trouble, it'll be bailed out. So I will accept a lower rate of interest on my money in exchange for that safety, and that is functionally a subsidy. And so that means the rate of profit for a too big to fail bank is higher than the rate of profit of a not too big to fail bank, which then creates the incentive for any bank that's not too big to fail to consolidate until it gets to the point where it too can start collecting that subsidy. And that subsidy can be also used for buying up smaller banks. that differential. Now, the issue, though, is, and we've seen the results of this over the last 20 years, as the banking sector has gotten consolidated and huge and too big to fail, and the number of small banks is declining rapidly. And because they're owned on a for-profit joint stock basis, there's little that can really be done to stop, short of ending the too big to fail subsidy, to stop this consolidation that's being subsidized. But credit unions are fairly immune to this, because unlike a joint stock bank that can, a large bank can just come in and say, we're going to plop this pile of money on the table and your bank is ours now. Credit unions are, as cooperatives, member-owned cooperatives, are legally set up in such a way that members would have to actually vote to dissolve the cooperative or change its charter democratically on a one-member, one-vote basis in order to be sold out to a bank, which is a much bigger hurdle than convincing a few key internal investors and the board of directors to accept a pile of money. So these credit unions, I think, are kind of from my perspective, one of the last roadblocks left in between the too big to fail banks and just total domination of the banking system. And so this latest battle, and there's been a lot of different fights the legislative fights that have happened over the years. This latest battle is really about the taxation of credit unions, saying the banks want credit unions to pay a corporate income tax, despite the fact that as not-for-profit institutions, any profits they make go back to the members.
Right.
And they're kind of using the rhetoric of, we want this to be a level playing field. But there's anyone who knows the history of the last few years can smell some hypocrisy in that.
Right. I think you touched on a really important distinction between banks and shareholders and the one vote, one member principle, isn't it? Credit unions have this dynamic where they're run for the benefit of their members. And each of those members has an equal sort of stake in governance. Whereas banks have this different dynamic in that there's this profit motive which their shareholders accumulate, and then the banks sort of run by sort of the concentration of shares. The concentration of shares dictates who has the control in sort of that relationship.
I mean, it's functionally a plutocracy. The way that power is distributed in a credit union, it's one member, one vote. So even if you are relatively poor, you still have an equal say in the governance of the institution as a wealthy person. Whereas someone who has $1 million has 100 times or $1 million worth of stock is 100 times the sort of the power, the clout.
Yeah, stake in decision making, I guess.
Yeah, as someone who has $10,000. So it's so that the different power dynamics, the democracy versus the kind of the in one versus what is functionally like an oligarchy in the other is a pretty powerful one.
So the banking industry has long been trying to sort of undermine this nonprofit model, and I think we're going to hear their latest or a recent call to do so.
Yeah. So this is from an American Bankers Association panel on credit union taxation. This is one of the things they're putting a lot of their energy into right now, because again, this is one of those final little sliver roadblocks against their total monopolization of the banking system. So check out this video of them trying to justify, really, they want credit unions to be taxed for their own good, right? And then when we get back, we'll discuss this a little bit more and have a few other videos to show as well. So stick around.
In the 86 Act, Congress said, you know what? Blue Cross Blue Shield, which is half the health insurance in the country, is competing against commercial insurers like Aetna and Cigna, and they pay tax, and Blue Cross Blue Shield doesn't, and that's not fair. And so they brought them into the tax system for the first time. I was back on the Hill as the Chief of Staff of the Joint Committee on Taxation in 1997 when we made TIAA-CREF taxable. it had been tax exempt since the enactment of the income tax. And 2 years later, when Frank Keating was head of the ACLI, he invited me out to be on a program with the board of directors, and I'm sitting at the table, and I introduced myself to the guy next to me, and I realized he's the CEO of TIAA CREF. And I said, hi, I'm Ken Keyes. Do you know who I am? He goes, you're damn right I do. And you know what? You making us taxable was the best thing that ever happened to us. We've become more competitive. We've branched out into new lines of business. We're a better company today than we ever were before. I thought, thank God for that. So Congress has made these kind of decisions in the past, and they've done it based on good policy, which is when you've got a company or companies or entities that are competing against other entities that are subject to income tax and they're not, it's just not right.
So I particularly love the tagline that they've picked for this campaign, which is "It's time to pay."
Yes, I mean, and that's I think a lot of their campaign has been reflexive to the credit union campaign started several months ago, the "Don't Tax My Credit Union" campaign. I particularly enjoyed the framing of that critique that they just want credit unions to be taxed to spur innovation in credit unions. It's awfully noble of them to really just always be thinking about how their competition can improve.
Mm-hmm. So I figure we can now show the second video, which is a credit union little cartoon or animation that they've been putting out on YouTube and on social media that gives the credit union perspective on the issue. And then when we get back, we'll dig into sort of where each side is coming from and where this stands politically right now, and what folks who support cooperatives need to be doing.
This is your money. You work hard to make it. And that's why 96 million people rely on their credit unions. Credit unions are rooted in communities with a mission to serve their members, especially the middle class, working families, and small businesses. They're member-owned and democratically run. And unlike banks, credit unions return their earnings to their members through higher interest on savings and low or no fees. Since a credit union's earnings benefit its members, they are not-for-profit and are tax-exempt. Credit unions also provide competition to banks by giving consumers a choice. That helps everyone. But some banks don't want this competition. They want to maximize profits for a small group of investors. And now there's talk in Washington about imposing new taxes on credit unions. These new taxes would fundamentally change or even eliminate credit unions. Bankers say taxing CUs will help balance the budget. Really? 40% of Americans are credit union members, yet credit unions hold only 6% of all financial assets, while banks hold the rest. So taxing CUs won't dent the budget deficit, but it will hurt the people who depend on them and our economy. For every dollar in new credit union taxes, the government wipes out $10 in benefits. That takes money right out of the hands of 96 million credit union members. So, many banks and some Washington politicians are trying to raise taxes on the middle class so banks can make more profit. But you didn't save your money to make someone else rich. Banks and credit unions have always been different for a reason. And if you like the difference, you can make a difference. Visit DontTaxMyCreditUnion.org to see what you can do.
So one of the things the banking sector has been bringing up is that credit unions have gotten have lost their way, and they're not actually serving low income people, and so they're no longer deserving of their tax exemption. But in that video, I think really a key statistic there is looking at that. All right, 6% of assets, 40% of people. Mm-hmm. You do the math on that, and it's saying, all right, so the people who own a little bit of wealth are the ones served by the credit unions. Whereas the banks are the ones who, to serve the 1%, so to speak, and to say, all right, we're gonna make it harder on the financial institutions that are serving the poorest people in society is really, has serious moral implications as well as practical ones in terms of the relative economic benefits of taxing or not taxing them.
Right, and it's important to note too that it's not just. I mean, there are these fundamental differences between credit unions and banks, but in terms of an operational sense, the tax status isn't the only thing that differs credit unions from banks. Credit unions have much more restrictive ways in which they can raise capital. They have a lot more restrictions on what they can invest in, and so it's not just there's this tax that one institution doesn't pay, and there's another another type of institution that does pay that tax. There are many differences in how they operate, and I think you could make the argument that some of those restrictions, while they don't sort of add to the bottom line of credit unions, they make the institution more safe, which again gets back to the sort of that too big to fail subsidy and the insurance risk.
Yeah, and that's what else is really interesting to me is this is just sort of the way in which the bankers are saying, okay, well, if you have a for-profit and a not-for-profit institution in competition with each other, it's almost as if the structure of those institutions shouldn't matter, versus saying that okay, there is a benefit to having this kind of widespread ownership and widespread control that really should be we should value as a society, and this is something where the irony of the slogan that the banks have adopted really for me just becomes incredibly rich, because this idea of it's time to pay. All right, if we're going to talk about the relative debts of these different sectors to society, let's talk about the bailouts for a minute. Let's talk about how there have been multiple times that the FDIC share insurance fund, or not the FDIC deposit insurance fund, has had to have infusions of federal capital, whereas the credit union insurance fund, credit unions have been safe and responsible, and the insurance fund has never had to have an infusion of tax dollars into it. Mm-hmm. And then there's the $700 billion, and that came up in the narrative that the banks are trying to push is that, oh well, enough of it's been paid back that the federal government has made a profit on this program. Like we're talking 5 years later now, which is, I think, really dodges one of these bigger issues, which is that if we are a market economy, the financial crisis and the collapse of the banks, the credit unions having behaved better, that little 6% could have, if the banks had been allowed to fail in that moment, that piece of the pie could have become much larger, because people would have said, okay, what are the institutions that were behaving safely? What were the institutions that were behaving responsibly? It was the credit unions. And so that crisis, had there been no intervention by the federal government had not offered up hundreds of billions of dollars to prop up their business model, the credit unions would be serving many more Americans and holding a much greater portion of the assets than they are now.
And that's the way a competition in a sort of free market system is supposed to work. If an organization is irresponsible and it needs to fail, the organizations that were run better, more efficiently, they're in a position to take that market share. Mm-hmm. So you have a serious breakdown of sort of a fair marketplace mm-hmm. in that.
And it also has this this kind of really interesting thing to think about. Okay, so the model of for-profit banking over the past several decades has clearly shown that it creates these social costs above and beyond, like the fact that the federal government has had to step in repeatedly and throw giant piles of money at these institutions, implies that there's something perhaps wrong with the institutional structure itself. That or these banks that are organized as joint stock corporations are perhaps not the optimal structure for financial institutions. And if you look at periods in history in which you've had more sort of a more hands-off approach to the financial system, that was, say, the heyday of mutual savings banks, because if you didn't have the backstop of state intervention one way or the other in terms of deposit insurance, and you had your life savings, you wanted to make sure it was in a bank that was accountable, was responsible. And so you put it in a mutual savings bank, you put it in a credit union, we put it in something that the leadership was directly accountable to the people who put their money in there. But with the emergence of these continued federal backstops, it's kind of created this moral hazard in which more risk-averse behavior was frowned upon, because, hey, like, what's the worst thing that can happen? If we really screw up, the federal government will just bail us out, and that'll be that. So we might as well pursue short-term things that will give us as individual employees of this bank large bonuses in the short run, and in the long run, who cares about institutional stability? And that's led to things like the financial crisis. And so the idea that it's time for credit unions to pay, and it's the federal government that's repeatedly thrown huge amounts of money just to keep the existing banking system alive, only because of that banking system's level of political influence, is just completely, this like upside down through the looking glass world that the bankers are trying to create out of thin air that doesn't reflect reality and what is best for the economy and best for people, which is a financial system in which the cooperative sector has a much larger share. I'm not saying all institutions should be cooperative. There's probably a place for a diversity of models, but the current 93% of deposits being held by for-profit banks, if you look at the actual forces involved in a just world, the pie shouldn't look like that.
Well, I mean, you touch on a very important piece, I think, in that there needs to be a diversity in the financial sector. With credit unions having this sort of fundamentally different structure and this not-for-profit model, they're able to go out and offer better interest rates, lower interest rates on loans, lower fees, and that competition in the marketplace, forces is a regulating influence on banks to ensure that their rates are as reasonable as possible. So that that creates a good place for the consumer, and it creates a system where these market dynamics are sort of working functionally without interference, which banks have to compete. If if the not-for-profit sector disappears, what's going to keep rates in check for consumers? I don't know.
I mean, the only thing that would be left is federal regulators, and given the track record of federal regulators over the past few decades of being captured by the industries that they regulate, whether you're looking at nuclear power or whether you're looking at Wall Street, the sort of putting our faith exclusively in the regulatory system is I don't think something that will end well. Whereas saying that you have these other alternative institutions that can say, hey, we're not making a profit, so we can figure out what is the cost of actually providing this service, and then the banks say, okay, well, we can't monopolistically jack up the price. We have to at least meet that. It's take into account what that institution is doing.
Right. I mean, I guess the banks could always regulate themselves.
I mean, that's what they already do. They just happen to call themselves federal regulators, more or less. Yeah. But it's the dynamics of this as well are really interesting, because on the one hand you have a cooperative movement that is rooted in people, one member, one vote. On the other hand, you have this like kind of oligarchy type thing where it's the very wealthy shareholders are the ones who make the decisions for these large banks, going toe to toe in a legislative fight. And so the strategies look very different. So when you look at the outreach that's being done by these bankers to push for the taxation of credit unions, there's like a lot of letters to the editor from people who are like the president of this bank or that bank.
That's been a very popular tactic. Yeah.
And then we saw those videos which were or that video which which was really a banker talking to other bankers. But really, it's been it's been sort of a professional type lobby campaign, because the bankers really don't have any sort of base of support to draw on, aside from maybe bank employees if they can be nudged into it. But there's no popular base for the banks, whereas for the credit unions, there's 96 million members, each of whom has an ownership stake in the institution. So, from a purely kind of like, if a person's really conscious of their interests, that's a pretty big base to potentially mobilize.
Sure, that's huge. That's huge.
And so we've been seeing kind of the tactics emerging as the call has gone out for people to mobilize. And we've got actually a video of the head of the Association of Vermont Credit Unions, Joe Bergeron, talking about sort of the kickoff of this campaign from, I think this is maybe a 2 or 3 month old video. So it's been out for a little while, but I think this gives a sense of like kind of what credit unions are calling on, what weapons they're bringing to bear to this fight. And when we get back from the video, we'll be talking a little bit more about that and sort of what that mobilization looks like, and what kind of the response to these call-outs can kind of tell us about the state of cooperative democracy and the cooperative kind of grassroots. So stick it around.
Our nation's credit union movement has embarked on an effort to be heard loud and clear in Congress, the likes of which we've never undertaken before. At risk is the tax-exempt status of your credit union and over 7,000 others across the country. Congress is considering an overhaul of federal tax laws that could eliminate the tax-exempt treatment of not-for-profit cooperative credit unions. They'd write a new tax code starting with a blank piece of paper. All exemptions would be wiped away, and a new tax law would be created from scratch. If that happens, the credit union exemption from corporate-type taxes will be erased. It will be up to all of us to advocate for its inclusion in a new tax code. Credit unions have faced tax challenges repeatedly over the years from the banking lobby. But this time, banker calls to tax credit unions will pale in comparison to getting our voices heard over those of more than 400 other industries that also enjoy special tax treatment under today's laws. If we aren't successful, the harm to cooperative credit unions could be huge. Many credit unions would close, some might convert to banks, and 93 million members will be negatively affected. For every $1 in new taxes on credit unions, $10 in member benefits gets wiped away. That's $6 to $10 billion a year, which in effect is raising taxes on working families and small businesses that rely on credit unions and the financial services that they provide. We could see tax-related legislation in Congress as early as this summer. That's why we're encouraging you and your credit union to participate in a nationwide grassroots campaign to get one simple message to Congress. Don't tax my credit union. The tax on credit unions is another tax on 96 million Americans. Now, some people ask, why start this effort now if there's not legislation in Congress to tax credit unions? And the answer is, we just don't know what's being drafted for legislation behind closed doors right now. But whatever gets included is much harder to remove later on. And there may never be a standalone vote on the taxation of credit unions. Instead, it'll be part of a large comprehensive tax bill that will have a lot of congressional support. That's why we need a very big and very strong credit union grassroots effort with Congress right now. Trade association lobbying alone can't save credit unions' tax status. We'll need every credit union, large and small, to ask members, employees, and volunteers to tell Congress, don't tax my credit union. Whether you're a credit union volunteer, employee, or member, everything you need to learn more, to send your short, simple message to Congress, and to encourage members to do the same is online at DontTaxMyCreditUnion.org. It can't be stressed enough how crucial it is to ask members to take action to protect their credit union now. And it starts with you going to DontTaxMyCreditUnion.org.
Welcome back to Cooperative Vermont. That was the call out from the Association of Vermont Credit Unions to sort of push back against this potential taxation. But it's been really interesting to sort of see the ways in which the credit union movement really has been pushing the message out. And Eric, you're on the board of Vermont Federal. Sort of from that perspective, what have you seen, like, both in terms of hearing from the wider movement and at Vermont Federal in terms of engagement with this campaign?
Well, I just want to touch on one thing before I delve into that. We got at the beginning of that video a sense of why sort of it's different this time. With credit unions have always been under attack by bankers, but the tax exemption may just get thrown out at the beginning of the process. Here as Congress tries to work on tax reform. Mm-hmm. So we've seen this different approach.
Right. So there's not the space for like a wide-ranging debate, but it's more kind of like there's many competing interests that will all be like making noise.
Right. And in the past, it's sort of been two lobbies against each other. The credit union lobby and the banking lobby. But I think this is really exciting because it presents the opportunity to do things differently. And I think we've seen CUNA certainly take a lead on that. And you can hear Joe Bergeron in that video really calling out to members. So going beyond the traditional industry focus and calling on those that credit unions help every day. Mm-hmm. So in sort of in terms of Vermont Federal, the management's been active on this front. There's a link to the Don't Tax My Credit Union page on Vermont Federal's homepage, and there's conversations around how to tailor the message directly to members. But I think really the distinction here between on the tax issue this time is that reliance to draw members mm-hmm. into the process and get members to participate.
There have been a few times in the past where members have been really mobilized. Probably the height of some of that activism was in the probably late 80s, early 90s, around, because there were some big fights around changes in what was allowed for charters, and there was mm-hmm. Operation Grassroots, which brought thousands of credit union volunteers and members to D.C. So in terms of the level of mobilization and the ways in which mobilization is happening with the credit union movement, it's definitely sort of different than the 90s, because technology is different for one.
Right.
So we've been seeing the campaign is a lot of social media. So the credit union movement has started using the DontTaxMyCU hashtag. So if anyone's out there and wants to kind of look and see some of the different materials that come out of that, you can just go on Twitter and type hashtag DontTaxMyCU, and then you can kind of browse through everything that's there.
Right. They had Don't Tax Tuesday, mm-hmm. which brought people together around that theme on a particular day. Mm-hmm. But I think the CUNA has certainly put out this call, and you hear Joe embracing it there. But because it's not something that credit unions are generally accustomed to doing, to reaching out their membership to advocate politically, I think you see this response taking form mm-hmm. Right now. I think it's very much how it looks is still yet to be determined, I think.
And I think this is one of there's kind of an interesting dynamic here in that you have these democratic institutions, but there has been, like, one of the issues that the credit union movement has been facing has been, over the past few decades really, has been declining democratic participation. As we've had larger institutions and they've gotten sort of more professionalized. I think one of the big things here is that an advantage of the cooperative model in general is the fact that you have this membership base that you can draw on to defend yourself politically if need be. But if that membership base doesn't really own their identity as member, and they really see themselves as maybe like the customers of maybe a particularly nice institution, but ultimately see their role as more customer than member, those folks are going to in order to get them really mobilized, they need to understand where their interests lie.
Well, I couldn't agree more. And really see that in the name of the program. Don't tax my credit union. That takes a realization that this is my credit union. This isn't just where I sort of go to conduct my financial business. This is my credit union. This is where we pool capital to make our community a better place. So that sense of ownership is right there.
And really it's just sort of like the political mobilization has to go hand in hand with this identity building project of saying, okay, once someone recognizes and internalizes the fact that I own this, I have a piece of this, then if someone's attacking the interest of something that I own, I should defend it. But so it's things like this that really, where I think in times of relative political quiet, there seems to have been, in a lot of the credit union movement, a tendency to underinvest in sort of democratic practice and underinvest, not, and by underinvest I mean just like, not really sort of put as much energy into things like annual meetings and member engagement and volunteer opportunities for members because for a variety of reasons in different institutions, but that the benefits to that are often, I think, not immediately apparent, but in moments like this, I think credit unions that have put that time and energy into really cultivating that cooperative consciousness amongst their memberships will have a much easier time mobilizing members politically than ones that haven't.
Yeah, I think that's accurate. I think we saw an example of this play out in Vermont last year, in which a credit union, state chartered credit union, came under attack for their use of the term banking, and you saw sort of membership rally around that organization, and so in threats like this, taxation, where you're not sure when it's going to come about, it's important to have that base there to support you and to be able to call on when there is a threat to the organization.
Yeah, and it's like it really is just one of those things where that ability to mobilize the grassroots and the democratic character, like the democratic character and culture of a cooperative institution are really one and the same. You can't have one without the other. And so I think something that would be really interesting to look at once this campaign is concluded would be just because CUNA has one of the things that you can do at home if you're sort of interested in helping out is you can go to that Don't Tax My Credit Union website, and then there's forms for contacting the congressional delegation to say, I don't want this to happen. But it will be interesting to see sort of if people on that form put in what credit union they're from, to see if there's certain credit unions that have a lot of members go and see how that relates to, okay, well, what's usual annual meeting attendance, what's the scale and things like that. I think there's a lot that we can learn about the state of credit union democracy right now from different credit unions' kind of response and engagement with this campaign.
Yeah, I mean, I think you can, obviously credit union taxation is a threat to credit unions and its members, but this is also an opportunity to cultivate that sense of ownership among members.
Yeah, so, and it's one of those things that's uncertain. Right now we're fighting this, but it's going to be a long ways, especially given, the political strength that the banks really showed in 2008 in terms of defending their market share. We're a long ways from that 6% being closer to 50%, which I think would be a reasonable goal. I think credit unions should have half of financial services in our pockets.
That sounds good to me.
But it's something where this particular fight is has been one piece of a much larger and longer battle, and if we can win this one and take some lessons from this one and keep moving forward, I think that there's a lot of opportunity here. There's the risk, and to lose this would be a serious blow against cooperative finance, which is one of the strongest and largest sort of sectors of the cooperative movement.
Yeah.
So it's a fight worth getting involved in if you care about co-ops.
Yeah, absolutely. I mean, and Joe Bergeron underlined it, the sort of the implications there that if the tax status were to change, you'd see a lot of credit unions go away, and you'd see others convert to banks. The potential to sort of erode this whole nonprofit sector. And it's interesting. The bankers put it in the context that this tax is an unfair advantage, but yet you generally see credit unions convert to banks and not the other way around. So if this was such a just huge competitive advantage, one would have to ask why that pattern exists.
It's unfair because the wealthy owners of these too big to fail banks can't pull the credit unions in and use them to soak the members or customers as well. It's a small sliver of the financial sector that's safe from their predation, and they don't like that. They don't want anyone to be safe from their machinations. So this is going to be a fight that, as long as we have a financial sector that is dominated by these big subsidized for-profit banks, and who will sometimes use little community banks as their running dogs, then we're gonna see these continued conflicts.
I mean, it underlines the importance of this initiative. So if you're a credit union member out there and you like your credit union, like the vast majority of credit union members do, definitely suggest going to DontTaxMyCreditUnion.org and checking out the resources there and thinking about potentially sending a letter to your representative.
And if you're on Twitter and want to follow the latest news, hashtag DontTaxMyCreditUnion, or if you want to troll the American Bankers Association, hashtag It's Time to Pay. Which is where they've been posting their anti-credit union propaganda. So we've got only a few minutes left, but for the next show that we're doing in 2 weeks, we're excited to announce that Molly O'Brien, who is on the chair of the board of City Market and is also on the board of the Neighboring Food Co-ops Association, will be coming in. The NFCA is a big alliance of food co-ops that I think there's close to 30 now. I think in there, it's pretty large. In the Northeast, of which City Market and many co-ops in Vermont are members. And they'll be having their annual meeting the day before. So we'll be getting her kind of fresh after that annual meeting with a sense of where the organization is, what's going on, what initiatives are going to be afoot. So I'm really excited for this interview.
Yeah, and we can talk about City Market too.
We can.
Always great.
Yeah, City Market's always fun to talk about. Yeah. I'm particularly excited for they're doing a history video in the next month or two, and once that comes out, I think we might have to show it on the show. But and again, reminder on events, we've got on the Saturday the 31st, tabling for Keep BT Local in City Hall Park at the Farmers Market. Tuesday, September 10th, will be Co-op Happy Hour at the Laboratory B Hackerspace. If you want to have some pizza and some good conversation, come on down to that. And the October 15th will be the Co-op Democracy event with the delegation of folks coming up from Mexico, which will also be really excellent.
And you can always keep in touch with our events on our Facebook page.
Yep, Cooperative Vermont. So until next episode, I'm Matt Cropp.
And I'm Eric Davis.
Good night.